Welcome everyone to Vested Interest. This is Shane back for another Stock Pick of the Day video. It is May 14th, Wednesday. We're going to take a look at another one out of the healthcare sector. The healthcare sector in general just keeps getting beaten up. We're going to take a look at AbbVie today. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Ring the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday. We take a look at a company stock that's pulled back on the day. Sometimes we'll look at stocks that have gone up, I know. But for the most part, we look at stocks that have pulled back on the day. Run it through my screener, see if it makes it onto my watch list. Now, just because it makes it on my watch list does not necessarily mean that I am buying. This is just a screener for my watch list. Once it's on my watch list, I go through those stocks. I do more of a deep dive into the financials. I run a discounted cash flow analysis on it. I find a range that I'm willing to pay, and if I'm really interested in the stock based on the fundamentals, that's looking at the balance sheet, the income statements, looking at their revenue, is it growing, looking at their margins, are they expanding, are they paying down debt, what does their debt to equity ratios look like, do they have more assets than liabilities, what does their price to book look like compared to their competitors, what does their PEG ratios look like, those are the type of things that I'm looking at on a deep dive into the company. This is just a high level screener to see if I'm interested in wasting any more time on the position or just moving along to the next one. So don't blindly buy anything that maybe passes the screener. Don't blindly buy anything that I'm buying, regardless of even if I'm buying it. I cover what I buy on my Sunday morning updates, so you'll see that every week as well. Again, one more reason to hit that thumbs up button, hit the subscribe button, and click that notification bell. But don't blindly follow anyone. Make sure you are investing based on your investing criteria. That means your timeline, how much money you have, what your goals are, so on and so forth. And a special thank you to the viewers and subscribers of the channel. I really do appreciate your time watching these videos. The channel continues to grow because of people like you. All right, this is the vested interest stock screener. You can pause this, go through the criteria. Again, you can tweak this, make it your own, but it is just a high-level screener. Must meet 5 of 8 to make it on my watch list. We'll check back on the screener at the end and see how this one shakes out. All right, back to AbbVie. Check them out on their homepage, www.abbvie.com. That's www.abbvie.com. That is their homepage where I pull this information from. And this company is going to be a pharmaceutical company, biopharmaceutical company, much like Pfizer, Merck, some of the other ones out there. AbbVie, it was a spinoff from Abbott Laboratories some years back, but this is really their pharmaceutical arm. From the beginning, our goal has been to take on tough health challenges. This is driven by our passion for people, commitment to innovation and inclusion, service to the community, and uncompromising integrity at the heart of everything we do. But we haven't come this far only come this far. That's kind of weird saying, but explore where we've been and how we continue to grow beyond medicine to make a remarkable impact that lasts. Right there is their key, medicine. That's what they provide, pharmaceutical drugs for those of us who need them. Now, the reason we were taking a look at them, down 5.81% on the day. Again, another day the healthcare sector was pretty beaten up overall. Seems to be a common thread lately. We are talking about AbbVie, ticker ABBV, out of the healthcare sector. Closed out the day at $177.44. Looks like they're up in the after hours slightly, at least whenever I pulled this information around 4 p.m. 52-week range as low as $153.58, as high as $218.66. They are not quite within 15% of a 52-week low. They need to drop to 176 and some change, so a little bit further to drop here. Under 176 would be within 15% of a 52-week low. Market cap of $312.794 billion. So a large cap company here. Beta of 0.55. Beta stands for the volatility of the market, 1 being the market. So 0.55 is less volatile than the overall market. PE, price to earnings ratio, $76 per share. Very elevated price to earnings ratio on this one. EPS, earnings per share at $2.33 per share. Earnings date coming up somewhere between the July 23rd to July 28th time frame. So a couple months out if you're looking for their next earnings report. Forward dividend, $6.56. They are a quarterly payer, so divide by 4, though we will see that here towards the end of the video. Nice starting dividend yield of 3.49%. Ex-dividend date, April 15th. So you would have had to buy them the day before, April 14th or before, and it looks like they're going to pay out that payout on the 15th. So if you held them or owned them April 14th or before that, you will get the next payout tomorrow, May 15th. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $210.75. So they see it going back up from here, but they don't quite see it getting back to its 52-week high. About $8 off of its $7 and some change off its 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average of 3.96%. We compare it to their current 3.49%. And since their dividend yield, their current dividend yield is here 3.49%, same number, is lower than the 5-year average, that speaks to overvaluation, at least according to dividend yield theory. Now, this is not looking good. Payout ratio extremely high, 268.8%. We want under, in my opinion, I like under 75%. For most companies outside of REITs, business development companies, closed-end funds, they typically pay 90% or more. But this one is a company that I want under 75%. So that is extremely high, and I start to get worried. Are they in danger of a dividend cut? Now, free cash flow, I like growing free cash flow over time because typically if a company has growing free cash flow, they can do some things with that free cash flow. They can reinvest back into the company. They can make acquisitions. They can pay down debt. They can pay a dividend, which this company does. They can increase that dividend over time, which is what I want as a dividend growth investor. They can even keep some of that cash on hand on their balance sheet as cash or as investments, right? If they go out and buy some stocks of their own or invest in another company or something like that. Now, free cash flow, going back to December 2022 here, you can see 24.2 billion, 2023, 22 billion. So drop down in 23, further drop in 24 to 17.8 billion, and the trailing 12 months looks like it may be a potential drop. But again, keep in mind, 2025 numbers only go through the first part of May here, and really probably through April, and they do include quite a bit of 2024 numbers still. All right, it's just the trailing 12 months. It's a year time frame, but it includes whatever year you're in plus whatever year you came from, right? So it looks like it may be in danger of another decrease, but we'll have to wait to see what, the rest of 2025 numbers looks like. Repurchase of capital shares going back to 2022 here, 1.4 billion taken out, 2023, 1.9. 24, 1.7, and 1.3. So they are pulling shares out of the market, though you would have to compare this to issuance of shares. We want them to be pulling more shares out of the market than they were issuing. We'll see that here towards the end whenever we look at their repurchase of shares, plus or negative, positive or negative. All right, jumping over to stockanalysis.com. This is another source I go to for information. I'm not affiliated with stockanalysis.com or Yahoo Finance, just two sources I go to. I do recommend more than one source for you to be looking at for information, 2, if not 3 sources, so you can make sure the information you are looking at is accurate and up to date. It gives you a way to back check the information you are viewing. Now, they do have 22 analysts that have taken a look at this. They call it a consensus buy. If you were to go to stockanalysis.com, you could click on each one of these tabs and say how many might call it a strong buy, how many call it a buy, how many call it a hold, a sell, or a strong sell out of these 22 analysts. Now, they have a low estimate of $185. It currently sits lower than their lowest estimate and would represent a 4.35% increase from where it currently sits if it came back up. Average estimate of $211.55. That would represent a 19.32% increase from where it currently sits, close to what we saw with Yahoo Finance on the previous page. And a high estimate of $250 would represent a 41.01% increase. All the while, you could collect that 3+% dividend yield if they maintain the dividend. Very high dividend payout ratio right now, it looks like. Now, I like to look at statistics, look at return on capital employed. I'm looking for 10% or better here. They're sitting at 19.06. So very good overall, almost twice what I'm looking for there. Earnings per share growth, I like 5% or better forecasted over the next 5 years. They're looking at 50.71 projected over the next 5 years. That's 10 times, over 10 times what I'm looking for. So very good numbers overall with revenue growth forecasted at 6.73%. Now let's run through the dividend history before we wrap this one up. Quarterly payer, as we mentioned, payout ratio extremely elevated, 280.35%. Dividend growth of 5.28%, but I'm questioning whether they should be growing that dividend with it being over the payout ratio over that. But this could be just a temporary bump in the road. Maybe they look better towards the end of the year. Usually I don't freak out over 1 or 2 or even 3/4 of a payout ratio extended above 75. But if it's a year, year and a half, 2 years, then I start to get pretty worried. because they're doing something, right? They're using cash on hand. They're issuing shares to pay for it. They're taking on debt to pay for it. So right now, their free cash flow is not covering the dividend. Growth of 53 years, buyback, and that 53 years includes the time they were part of Laboratories. Abbott, not Labatt, Abbott Laboratories. So that's why it's 53 years. I know the spinoff wasn't 53 years ago, but they do include the time it was Abbott Laboratories. Buyback yield is actually negative, which means they are not efficiently buying back shares. They are issuing more shares, just slightly more shares than they are buying back. Shareholder yield is positive at 3.64%, which we want to see. They do pay out off schedule, February, May, August, November. Most companies start their payouts in March. So this is a little off schedule here, which I do like that. I like payouts every single month, and I don't have any monthly payers in my portfolio. I've just constructed my portfolio in a way where I've got positions in different sectors paying out in different months. Now, October 13th, 2022 here, going back in time, they were paying $1.41 in dividends. They raised that up January 2023 to $1.48. They raised that up again January 24 up to $1.55, and they raised that up most recently January 2025 to $1.64. So again, they are growing that dividend, but this payout ratio is extremely elevated. All right, let's run through the screener. Understand the business again. They are like a Pfizer, Merck, some of the other pharmaceutical companies out there, but a pharmaceutical company nonetheless. Growing free cash flow, no. They've had a couple, at least 2 down years, if not 3 down years going into 2025. Now it could potentially be another one. We'll have to wait and see what the rest of the numbers shake out and tell us. Growing dividend, yes, they are still growing the dividend. Dividend payout ratio is way above 75%. It's over 3 times 75%. So way elevated payout ratio, something to keep an eye on. Dividend yield theory says they're potentially undervalued. No, they don't. Dividend yield theory actually says they're potentially overvalued. So no check there. It is not within 15% of a 52-week low. It needs to drop by $1, a little over, to get there. Under, like I said, $76 and some change, and it's currently at 77, so it needs to drop down some more. Return on capital employed, 10% or better, yes. It was almost 20%, and earnings per share growth forecasted above 5%, yes, above 50%. So check there. So we're looking at 4 of 8. Doesn't quite make it onto my watch list. I know this was a darling here a couple years back. People were all over this company, really loved it, but it doesn't look as attractive right now. But the whole healthcare sector doesn't. So might be a time to start looking at the healthcare sector with a lot of these companies at or near 52-week lows. To start figuring out which ones you might want to add to your portfolio. Let me know what you think of AbbVie down in the comment section below. Would love to hear from you. That is really it for this one. As always, appreciate you stopping by. And if you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Again, let me know what you think in the comment section down below. What do you think of AbbVie? Are you concerned with its elevated payout ratio? Is it one in your portfolio? Maybe you're one of the reasons it was down and you were selling today. Would love to hear from you. I do personally read and respond to the comments, as I said. And if you have a company like AbbVie you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below as well, and I will work it into the rotation on the day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm willing to share my opinion, investment journey for educational and entertainment purposes. If it has involves risk, you can lose money, should never invest any amount you're not comfortable using. Always do your own research and best based on your situation, circumstances, and select criteria, or seek the advice of counsel, a certified financial advisor.